Hey everyone, thank you for joining us this afternoon. We're going to wait a few more minutes for folks to trickle in and we'll get started in just a moment. Everyone, thanks again for joining us. We're going to wait about one more minute for more folks to log on and we'll get going soon. Okay, let's go ahead and get started. Thank you everyone for tuning in to this afternoon's discussion. My name is David Garcia and I am the Policy Director at the Terner Center for Housing Innovation at UC Berkeley. For those of you who may be unfamiliar with the Terner Center, we are a housing research and policy organization at UC Berkeley with a focus on areas such as land use reform, affordable housing, construction costs and innovations, things like that. Today, we will be going over some brand new research on ADUs and followed by a discussion with a panel of ADU experts. So I first want to give a big thanks to our partners for today's event, the UC Berkeley Center for Community Innovation and Professor Karen Chapple, who will be presenting her latest research momentarily, as well as the Casita Coalition, which does some great work advocating for ADUs and missing middle housing throughout the state. So after Professor Chapple's presentation, we'll be joined by a panel discussion featuring Erik Preston with Habitat ADU, Gary Geiler from the city of San Diego, as well as Steve Vallejos of Prefab ADU. And I should also mention that Steve was an inaugural member of the Terner Center's Housing Lab program. So always good to have you back, Steve. The discussion will be moderated by Denise Pinkston, who has done as much work as anyone in pushing for a good ADU policy at the state level. And she's also the board president of the Casita Coalition. So thank you, Denise, for being here to guide this conversation. But before I hand it over to Karen, I want to begin with a few housekeeping items. The first is that we will be taking audience questions. And if you'd like to submit a question, there's a couple ways to do so. The first is that you can tweet us. Our handle is @TernerHousing. Or you can just send us an email. We'll be checking that. The email is ternercenter@berkeley.edu. Also, we're recording today's event, and it'll be available on our website afterwards if you'd like to send it around or you'd like to watch it again. So with that, I'd like to turn it over to Professor Karen Chapple, who is a director at the Center for Community Innovation, as well as a faculty research affiliate of the Terner Center. She was there at the beginning, is such a great partner. We're really grateful to have her here today. But first and foremost, she is really one of the premier academic authorities on ADUs, and we're really excited that she is here today to share her latest work. So with that, I want to hand it over to Karen, who will be sharing her screen and walking us through her latest work. So Karen, go ahead and take it away.
Sorry. Terrific. Thank you. Sorry for the delay. Thank you so much to David and the Terner Center for sponsoring this event, along with the Casita Coalition, getting it organized. And I also want to give a shout out to all of the folks that worked on the research that you're about to see. And so that includes David and Julian at the Terner Center, but also Ben and Elizabeth and Carolina and Cora all helped out with this work. And then on my staff, there was Dory, Audrey, Isaac, Rachel, Erik, and a few others who were really helpful in getting this work done. So the reports that I'm going to present on today are available already online. You can get them at the policy brief that we did at Terner Center website, ternercenter.berkeley.edu. And you can find our latest ADU report, which we actually released this morning at aducalifornia.org. I want to give a shout out to the California Department of Housing and Community Development, who sponsored this research. So we're really, really grateful that the state is monitoring its work as it goes along. So a word about methods. So we use a variety of different data sources here. What we're able to get a lot of insights by using the annual progress report data on ADU production, and then linking that to a number of different other data sources. We also did a survey of 540 jurisdictions with a 44% response rate. We've done interviews, and then we run statistics, regressions on the whole thing to see what's been happening. So here we'll start to look at the results. So first of all, you can see, just looking at 2 years of data in California, the number of permits has tripled, really, and the number of completions also has tripled. So basically, we're seeing an exponential growth in permitting and completions. This may not continue at this rate, but we do expect solid growth into the future. Where is it happening? Well, it is happening all over California, but to different degrees. And so this map really gives you a sense of the concentration of ADU permitting and completions, and the permitting is in orange, the completions are in red. The concentrations are around the greater San Francisco Bay Area, and then Southern California extending from LA County to San Diego County. Now you can see other concentrations, small ones in the north in small cities, and a little bit in the areas like Tahoe, but really not very much in the center of the state. If we zoom in on LA, and you can look at the pattern of LA of ADU permitting and completions against home values. So the dark blue is the highest home value zip codes, the light blue is the lowest home value zip code. And this is what's super interesting to us, is that ADUs are getting permitted and completed in all kinds of neighborhoods. And in fact, in LA, quite a few are being built in the lowest home value areas, which was super interesting and not what we expected to see. If we go up to the Bay Area, we see a little bit less diversity in where ADUs are getting built. So in the Bay Area, ADU construction more or less is concentrated in the higher home value areas. And we hypothesize that that's related in part to the difficulty of getting finance for the homeowners in the lower income areas. This gives you a sense of which types of neighborhoods are building ADUs. So we divide the state's neighborhoods into 4 quartiles, from low to high, and the light blue bar is the percent of neighborhoods in each of those quartiles. And then you can see the extent to which they are building. So the low income neighborhoods are permitting at a lower rate, 22%, in that bottom quartile than the share of low income neighborhoods, and they're completing at an even lower rate. In comparison, middle to high income neighborhoods are permitting and completing at a higher rate. However, if you look at neighborhoods by the share of white folks, non-Latinx whites, you can see that actually the neighborhoods that are majority non-white are permitting ADUs at a higher rate than the ones that are majority white. And that we believe this again reflects that large share of ADU permitting and completions that are going on in LA County. If you look at ADU permitting and completions against opportunity areas, TCAC opportunity areas, you see an interesting pattern. The far left bar is Los Angeles, and you can see that permitting and completions are fairly constant across different areas designated by resource level, from low in the very light blue to highest resource areas, highest opportunity areas in the darker blue. However, in the Bay Area, you see a lot more construction relatively in the highest resource areas. And Orange County, again, is a lot of construction in the lower resource areas. So we were interested in looking at this because we want to see ADU completions across all neighborhood types. And so if they're built in low resource areas, it's a great way to build home equity and bring in extra income, rental income for those homeowners. So we want to see a lot of construction in low resource areas. We also want to see a lot of construction in high resource areas, because then it will diversify the types of housing there and allow for a more diverse population to move in. So who's building ADUs? Well, it turns out there's particular characteristics of the folks that are building. They tend to be newer homeowners, people that have built in the last 5 years. They tend to still have a mortgage. They tend to be homeowners, not corporations. Much more likely to be actual families that are building them. Most, unsurprisingly, are built on single family lots. However, 2% have been built on lots with duplexes, triplexes, or fourplexes, and 2% have been built on multifamily lots. A lot of those are in San Francisco, of course, where you see a lot of ADU construction in apartment buildings. 70% have been built on lots where the main home has 3 or more bedrooms. So this to me was one of the most surprising findings we had. So people have a lot of space, but they're still building. Why? Because they want separate space, and maybe because they are aging out. They want to turn over the main house to their kids, or they want to send their teenagers out to the in-law unit. Whatever the reason is, you're seeing this, or you're just alleviating overcrowding, and that's probably what we're seeing in some of the more low-income areas, where you just need more bedrooms than 3. These are being built on many different lot sizes. Many are actually being built on very large lots in rural areas, over 1 acre, 1 to 2 acres. There's also a fair number that are being built on lots that are 5,000 square foot or less. And there's 3,300 ADUs built on these smaller lots, which shows that overcoming that minimum lot size regulation is a really important reform to make in order to build more. In terms of the barriers that folks face, there are in our survey we asked what is blocking people's construction, and we found that financial barriers dwarfs all the other ones. So financial barriers are really stopping people from getting these built. Lack of desire, of course, has a role. Lack of awareness, lack of education about ADUs is still really playing a role. And then, of course, site physical limitations are still important. So let's talk a little bit more about the financial barriers, which was the subject of the Terner brief that we did. So why is financing hard to get? Well, lenders still consider ADUs to be quite risky. You can't borrow often based on that future income stream that you're anticipating from the ADU. Lenders put out limits on what you can do. So often households are using conventional mortgages and refi cash outs. Actually, about half of the homeowners use this method, but this is limited. The GSEs limit these loans to only part of your home equity, so it might not be enough to cover what you need to borrow. Renovation loans are being used, but in a very limited extent. To less than 5% are using FHA loans, renovation loans right now, and that's because they're really limited. They're constricted. They're you're limited by the length of the time that your construction project is gonna last. So in sum, it's very easy to build, relatively easy to build an ADU and finance it if you're high income and you have high home equity. But it gets very complicated to find financing if you have very low home equity and you're a low income household. So we asked jurisdictions, what do you really think about all this legislation that the state has been sending your way? And so we asked them what their elected officials think, and we asked them what their public thinks. And in general, we were surprised to learn that they're very supportive. 86% were supportive or very supportive, both of the public and of elected officials. So this is a popular piece of legislation. That's sort of the good news. The bad news is in this quote you can see, which personifies the bad news. A Central Valley jurisdiction says, we feel a bit duped because the state came in and changed ADU legislation again, and to a degree where we really have little, if any, local control. So we got a ton of complaints from jurisdictions across the state about how the legislation was coming down, how it changes every year, how there was very little technical assistance for implementation. And so forth. And we've cataloged all that, all those complaints, and we're sending that to HCD. You won't find it all in the report, but HCD will find out about all this. So we also looked at best practices in implementing ADU legislation. And we found that jurisdictions across California are innovating in best practices. And it's really startling, all the different things that all the different jurisdictions are doing. So we have a number, of course, unexpectedly are counting their ADUs towards their RENA requirements. One thing we found was that a number are also providing free application fees, waiving application fees, or providing handouts, or building a website. What we've done in our report, we document all these different innovations, the best practices, and we go into depth on a few different best practices that we thought were really worth calling out. ADU prototypes, pre-approved plans, vendor lists. There's examples, for instance, City of San Diego or County of San Diego has pre-approved online ADU plans. City of San Jose has a list of designers and builders. These are great practices. ADU financing programs, we see great partnerships emerging. We have an example in our report of government-led solutions, like in San Mateo County, the one-stop shop with Hello Housing in the local cities. Partnerships with banks like Santa Cruz County's ADU Forgivable Loan Program, and other nonprofit examples. In general, we saw regional differences in these best practices. So here's what's going on by region across California. So free application review. So a number of different planning offices will do application review in advance. These are much more likely to be in the Bay Area or LA County than the rest of the state. Fee reductions we also see are much more common in the Bay Area compared to the rest of the state. And impact fee waivers are also occurring disproportionately in the San Francisco Bay Area. So it would be nice to see these best practices spread across the state. We have a tool for making that happen, a website. So if you go to aducalifornia.org, you'll see our best practice page. You can click on the practices, read about them, and contact folks that are implementing them and hopefully replicate them in your own city. Finally, we asked jurisdictions about their support for the Mission Middle. We want to see whether they're ready for the next move in California to support legislation that will open up different types of housing types. So from duplexes, fourplexes to townhouses and so forth. Now we found that there was actually widespread interest across the state in developing missing middle zoning, but different based on the type of jurisdiction. So large cities, counties, large suburbs are particularly interested in the missing middle, not so popular among the smaller suburbs. So finally, I want to wrap up with a couple words about policy. And I know that our panel will pick up on a lot of this, so I'll be quick here. The first point I want to make is about finance and what we should be doing. So Fannie Mae really could step up here, and we would like to see this happen under a federal administration. What Fannie Mae could be doing is expanding its waiver program, which it has already, for waivers for in-place ADU tenants. If you don't have that tenant, they give you a waiver. And they should expand that program and expand their construction lending programs. And I think that would kind of set the tone for the rest of the country. Cal HFA also could be playing a role here, creating financial products to cover a portion of losses to private lenders resulting from default. So this is a sort of a bridge program that HFA could launch. We'd like to see AB 69 and 1120 get passed in a future session. They didn't get through this time. But the panel can talk more about that. And finally, there's a number of recommendations we think that have to do with education and awareness. So we really need to raise awareness of ADU potential among homeowners. We need to target in particular low-income homeowners. We need to provide more technical assistance to local planners, to overworked staff, planning staff. We need to have more resources for peer learning among different planning staff. We need to do more of these kinds of pre-approved ADU prototypes. And then, finally, we need to work probably more collaboratively and more aggressively on state legislation. So we need to push forward missing middle housing legislation while we have this kind of support among the public. And then we need to make sure that future state legislation is co-produced really with communities from across California, so that we don't get one-size-fits-all legislation that could actually raise resentment among California cities. So with that, I want to hear from our panel. Thank you.
David, are we ready, or shall I just jump in?
Yeah, go ahead, Denise. It's all you.
All right. Welcome, everybody, and special thanks to the panelists. I think it was 5 years ago when Karen and I had just read Yes in My Backyard, Karen's research report on ADU potential in neighborhoods in California. And it struck me that there was no statewide conversation occurring about ADUs, and that if we could just get the state to enter into this space and create more uniform rules throughout the state, we might make a big difference. So fast forward 5 years, that got done. And I think just the title of Karen's slides indicate how powerful some relatively significant, but also in a way minor changes to state law have really transformed housing production in California, created income stability for families, shelter in a time of a pandemic, and spurred an entire new industry around building these things. So today, and in order to continue that unfolding in this ADU revolution, as well as the whole small housing dialogue, I founded and am now the president of the Casita Coalition, which is a statewide California nonprofit. And our mission is to go big on small homes and continue to identify and remove the barriers to all small housing forms, with ADUs really being the most dynamic small housing form today in California. But we are hopeful that future small housing forms will also be possible. And joining me today are Steve Vallejos, who I've been working with, I think, many of those 5 years, at least 4 of the 5, on ADU policy and state legislation ideas. And then Erik Preston, who's a new ADU friend and colleague with Habitat ADU. So let's go ahead and kick off the panelists with a few questions. So first of all, I'd like to hear a little bit about what you guys do. You're both ADU builders, but your business models are slightly different. And then also get your reaction to kind of the information Karen presented and how you view ADU builders as being an important part of this new ecosystem of California's ADU Green Deal. And then we also have Gary Geiler from the city of San Diego. As Karen's slides pointed out, San Diego has got one of the most successful adoption rates of ADUs. And Gary, we're all really curious to know what your secret sauce is. So with that, let's start with Steve and Erik to talk briefly about your business models and thoughts about where this might go. And then we'll talk to Gary about the San Diego miracle unfolding in front of us. Steve, you want to start off?
Sure. It's great to be here. It continues to be more and more of an exciting time to be a part of the ADU space. I'm kind of a loner in this space for many years. I was crazy enough to embark on this back in 2004, 2005, and spent quite a few years with everybody I know telling me I was crazy to be pursuing something that everybody else thinks is a crazy idea. It's wonderful to see that it is now an industry across the United States and other countries. For me, I've been designing and building them using prefab technology from the very beginning. I'm a licensed general contractor, and I'm also a manufacturer of panelized kits that we will actually be selling across California starting soon. We've done, I think, now over 300 units across, 50 to 60 jurisdictions. So we've got the very painful process of hands-on for a lot of years, and of course, relationship with Denise, we were able to give a tremendous amount of feedback about where things are working well and what problems that we have seen. And with that, sharing that information has created opportunities for organizations like the Casita Coalition to help put forth legislation to tear down those barriers. And I think the last couple of years, 2017 and 2019, were huge in removing barriers. COVID has been an unfortunate response to such a big ADU change, but it doesn't mean that we're dead in the water. It just meant that we weren't able to hit the trajectory we were hoping for in 2020 because of COVID. So I'm hopeful that as we find our way back to normal, we'll really see those upticks happen even better than what Karen has showed us from 2019, because the 6 bills tied to ADUs last year removed a tremendous amount of barriers, and it's a great opportunity to really push forward. So it is an exciting time.
Great. Erik, join the conversation. Tell us a little bit about Habitat ADU and some thoughts about Karen's presentation.
Absolutely. Well, thank you so much for having me. And we at Habitat ADU are also proud members of the Casita Coalition. My name is Erik Preston. I'm on the leadership team here. My background is a series of prop tech startups, venture funded in the Bay Area. Most recently was at a company called Open Door, and joined Habitat with a passion for trying to make a difference and to help combat the affordable housing crisis in California. Our approach at Habitat is a bit unique in the space in that we focus on manufactured home ADUs, which have some trade-offs, but ultimately we strive to provide 2 things to customers. The first is the lowest possible price to incentivize more homeowners and more investors to build ADUs. Our general thesis is that more housing in general is a good thing that can help add affordable housing across the board and attainable housing more generally. Our second operational thesis is that we want to make the process as simple and as turnkey as possible. So we provide everything from A to Z, design, permitting, the unit itself, the installation work, to make sure that it's simple as pointing and clicking to get a new ADU added to your property. More broadly, I'm a huge fan of this research. I thought it was extremely well done, and really any sort of academic and educational attention paid to the space is going to help create better policies, going to help create better programs, and better interactions with local jurisdictions to help encourage more ADUs to be built. I'm excited for the research to continue and to go deeper. And particularly, I personally work a lot on financing products and solutions. So I'm sure as we go on with the panel, we'll dive in deeper into some of those issues and what can be done to help unblock incremental ADU construction for customers where previously it was impossible.
Thank you both. I think just to kind of wrap up the introduction of just a couple of ADU builders, there are now dozens of companies sprouting up all throughout California trying to figure out the best way to deliver the most ADUs at the lowest price point. And as those prices start to come down, that alone helps to ease some of the financing problems, because if ADUs become more like financing a car loan and less like buying a $250,000 or $500,000 asset, that makes financing easier. And in that regard, I want to bring Gary into the conversation, because San Diego's been doing some really amazing innovating in the ADU space. And I believe you're one of the largest cities in California now to allow tiny homes, wheeled tiny homes, to be built as ADUs. So Gary, welcome. Why don't you tell us a little bit about San Diego and your secret sauce, and then also how tiny homes reduce the cost barrier for homeowners.
Okay. Thank you for inviting me to be a part of this panel. I too am intrigued by the research and the data that you looked at, and we did a lot of that when we adopted our regulations in 2017, the first new regulations that passed. We really looked at, we were lucky because we had a current framework for companion units, and we got to look at data to see how many were approved over the past 10, 15 years prior to 2017. So we looked at, number one, we needed to change our regulations to be in line with the new state in 2017, look at our fees, look at our process, and focus on outreach, most importantly. So the regulations, we went above and beyond what the state required in 2017, which I think helped a lot. We reduced a lot of the fees. We reduced the process timing. We went to an over-the-counter model instead of a submitted model, which predates this new requirement from the state to get it done in 60 days. And most importantly, we did the outreach. I personally went to council offices, the mayor office, community planning groups, real estate agencies, developers, business associations, chambers of commerce, and got the word out. You would not believe of the, probably 1,000 people I met, they each talked to one person who then talked to another person. And the word spread. We created a very robust website that people were able to contact us with their questions, and I monitored pretty much all of those. We put in place a review team that focused solely on these. So from the outset, they would get consistent reviews in a time frame. We could then see what areas actually still needed to be worked on. Were there instances in which encroachments or height were still an issue? Let's address those. And we changed those midstream in probably 2018. We did look at data too. We mapped these out throughout the city and say, where are these at? And we noticed they weren't in the south of 8, which is traditionally the poor income, lower income areas of the city of San Diego, and they weren't in the coastal area. That was because they required a coastal development permit. So the costs were prohibitive there. So I personally went out to some of those areas to talk to those groups about how they were being processed now, how they could be affordable. We partnered with a lot of the ADU coalitions, some of the contractors and developers, and the Housing Commission and the Housing Federations here that provided that additional input on financing, because that is a key component to this that is often overlooked. As much as we reduce the fees down to the process of our cost to recover the review and inspection fees, people were still shocked to get a quote from a contractor about how much these cost. And even actually the smaller they went, they saw they were getting more cost prohibitive. So we can do as much as we can on our side to reduce the regulatory fees and process and the times. There's still work to be done. And I like this presentation because it talks about the financing that's available And we need to do more outreach in those communities so that they are aware of that. Finally, I think in our new regulations that HCD has looked at, we're looking at a bonus ADU option, which the Housing Commission has contacted me on, the Housing Federation, and they're really looking forward to that opportunity. I've partnered with them. We've identified sites within the city of San Diego where they can use our pre-designed plans and process in a batched fashion to get those to the market sooner. So I'm really excited about this presentation and the data that you've presented.
Hey, Gary, just as a follow-on question, I think Karen's data showed that a lot of cities are trying to innovate. They're trying to figure out what to do to be the most helpful. I'm wondering if you guys have got an easy handout or anything that describes what your secret sauce was that Karen and the Terner Center and Casita Coalition might start to share out with other cities. Is there a good web link or a brochure or something that we can point people to?
Yes, our City of San Diego Development Services webpage. We focused a whole webpage, just a companion unit, with all the different resources available. And we partnered early on with the Housing Federation, a council office that saw the value and potential in this, and created a guidebook that gave you numerous options, kind of identified all the different sites that these could be on and the different configurations that they could be, whether it's a conversion, a second story addition, detached, attached. Obviously with these new regulations, we need to update that, but it is an excellent guidebook. It's quite large compared to maybe some of the other jurisdictions' guidebooks, but we've gotten really positive feedback on that. It is on our website as well as other resources. We've published the pre-designed plans from other government agencies that anyone can use. So those have been helpful as well. But I've really found the one-on-one outreach with community groups in that setting really goes a lot further.
Karen had a question.
No, just to note that we think Gary's material is fantastic, and we have highlighted it on our own website at aducalifornia.org. You can go right to Gary's work.
Great. And then Gary, would you just talk for 30 seconds about tiny homes? And I'd like to move into, as a way of saying, a low cost helps solve some financing problems. And then we can talk about, the bigger financing issues.
Right. So we just recently adopted the tiny home regulations. These are a type of accessory dwelling unit, if you will. They are regulated by the state of California under Department of Motor Vehicle rules. We fashioned them in such a way to address some neighborhood concerns and some concerns from the fire department and other accessory dwelling issues. These are on wheels, so they are different. We are getting a lot of inquiries about how this is perhaps an easier low-cost solution to the stick-built housing. And we will be seeing applications shortly, so I can update you on that in the process. But once again, with that, we are going to have some outreach. We're going to have an information bulletin and provide that. But the feedback we're getting is those are in the range of 40 to 50,000.
Great, thank you. That's very helpful. And I think that's a good segue to the financing question. One of the primary barriers for lower income families is obviously access to capital. And as Karen described, the loan products that are out there work well if you have assets, capital assets, either equity or cash, and not so well if you're trying to borrow against the future income stream of a building that doesn't exist yet, which I think Fannie, Freddie are barred from lending on. So could Steve, or let's start with Erik this time just to mix it up. Erik, why don't you talk a little bit about financing and some of the solutions you guys are working on with lenders that might help folks on this webinar really think about financing options. And then we'll go back to Gary to talk about financing and wind that up with Steve, who we started with. So Erik.
Sure. So yeah, I think financing is fairly straightforward and simple in two situations. If you happen to have a ton of liquid savings, obviously you're just going to finance it out of your checking account. And that is, for the very few people that are fortunate enough to be in that situation, a very straightforward process. The other fairly straightforward, well understood financing mechanism is just a HELOC or a cash out refi, which requires a huge amount of existing equity to already be in your current home as it exists today. I think one area of financing that doesn't get focused on enough is for higher income borrowers with sterling silver credit scores. They can still have incredible amounts of intent, but still incredible amounts of difficulty getting financing to build an ADU if they don't have enough equity available in their existing home. So let's say we bought a home 2 years ago and we bought it with a 20% down loan. We've maybe paid it down a little bit, so we're sitting on 22, 25% equity in my home. There's not enough there to borrow against for a HELOC or a cash out refi. So I'm looking at renovation loans, and the single biggest issue that we see at Habitat across the board that prevents high intent homeowners from building ADUs is that the renovation loan does not contribute enough value based on the appraisal that is ordered for GSEs or portfolio lenders to be able to loan against it. So that is sort of the issue that I like to talk about the most. And I think one of the areas for most immediate improvement in the financing space to unlock low-hanging fruit projects that could get started next month.
And what would be needed to do that? You and I've talked about it, but I'm just
I mean,
a leading question.
Lenders, it turns out, really like to have collateral, right? So it does allow them to offer lower interest rates, better financing products. So one thing that I think exists as very low-hanging fruit is just more standardized and consistent training for appraisers across the board, and perhaps further relaxation of the guidelines that appraisers have to follow when assessing the value of an as-improved home. Today, it's a difficult job, and you're limited in the methodology that you're allowed to use, but whether it's Fannie guidelines or sort of the general Appraisal Institute guidelines that they set out, you're a little bit limited in your methodologies available as an appraiser. There's also not a ton of comps on the market yet, and that will improve dramatically as time goes on. But in the meantime, a relaxation of those guidelines, which has started to happen a bit, both Fannie and Freddie released updated, more relaxed appraisal guidelines in the last month, which is phenomenal. I'd love to continue to see that happen. But just consistency in the training. There are alternative methodologies available to appraisers that could result in more consistent and higher valuations, contributory values to these ADUs that would unlock so much more collateral and higher loan amounts for borrowers of all income levels. But too often we see a 200K ADU that can bring in 3K in monthly rent appraised for only 10K in contributory value. And that's, to me, both unacceptable and extremely harmful to borrowers and to homeowners as they attempt to get ADUs built.
Thank you. And I think we talked about this earlier, but when the barrier was land use, you couldn't build an ADU because it wasn't legal. No one could see through to the ecosystem around financing, building, and lending to understand what those barriers might be. And I think the builder community is now confronting those. And among them, it's not just banks, it's appraisers, appraisal guidelines, how they're recorded in the MLS as an ADU to allow comps to be widely understood. So I think we're seeing these next gen problems across the ecosystem of lending and building, and that was a good summary. So Gary, in San Diego, are you encountering these problems as well? And what are you doing to address them? And what additional changes do you think we need at the state or federal, local level to unlock more ADU potential from a financing barrier standpoint? Gary, you're on mute.
Okay, thank you. This did come up early on with the adoption of companion units, and some of the confusion were just those things that we all just discussed. So it forced us to kind of go out of our comfort zone and team up with outside groups to educate the public on the options or to look for options, talking with Housing Federation nonprofits, actually joining with the county assessor. Most questions came up about, is my property going to get reassessed? Is it the full land value? Is it just the companion unit? These questions hadn't been really addressed. So we had a good partnership with our local office of the county assessor, who provided forums, included me in those, involved appraisers, involved bankers. real estate professionals to let people know ahead of time, because some people got into it a little too soon and didn't know what those ultimate costs would be. So it's really important, and I tell everyone that calls me and says, I wanted to build an ADU. I start with that conversation about financing, about, I can tell you what the expected costs are processing through the city, what those permit fees will be. I can give you a general idea of what construction costs will be, but those vary, and your financing options vary too, and they're changing as well. So it's kind of fluid at the moment. I'm just open to this dialogue, and I hope it's helpful, but I suggest reaching out to the county assessor, reaching out to nonprofits, housing industry. Our local banking institutions have been helpful here as well. And like these gentlemen mentioned, the appraisers and other real estate professionals.
Great. And then Steve, let's take it to you. You've been doing this longer than many ADU builders, and you've been watching the finance conversation unfold over time. What are you seeing now in terms of finance as a barrier to your customers purchasing your products or building their ADUs, and what next gen barriers do you think we need to work on?
For me, I tend to want to be more careful about choice of words when we talk about finance and say financing is a problem, because I see the market as a whole, understanding where the growth potential is and expansion over 5 to 10 years. And so when we look at where we're at, Karen's report gives you a real solid understanding of where we're at. I mean, at this point right now, the 18 and 19 permit applications put you at barely over 21,000 in terms of applications. So if we couple that with the 17-year run of legislation, that we've had, let's say we're somewhere at like 30,000 ADUs have been deployed since 2003. Looking at a 9 million home market in California, we're less than 0.3% in terms of saturation. So what we really have to understand is where we're at in the marketplace, and we're still at early adopters. And if we understand that, then we have to be more pragmatic about how we address all of our issues. You were the first one to tell me, look, we can't tackle 40 things at a time with legislation. We got to go in and pick 5 things that are our best case of getting approved, and be hopeful that we can get 2 or 3 of them to get passed on the bill. I feel that same way about finance. I've sat in many meetings at the Federal Reserve and in Washington, D.C. with Fannie Mae, with every bank entity possible, and everybody's looking for a one loan solution for this, but they're scared to jump into the space because we haven't proven that we are really a big market yet. And so with that in mind, sorry to get long-winded on this, but the context of this means that we really have to get down to the micro level of this and get some wins with some financial experiments. And it's not just that the experiment needs to be launched and get lots of publicity. We have to follow up after that and say, was it successful? What part of it needs to be tuned so that we can gain some more momentum with it? With that momentum, and if that's happening in several different areas with several different solutions, I think it makes it a lot easier to have that conversation with Fannie saying, you're right, it's time now for us to consider backing some of these people so that we can mitigate some of their risk. There's all these different layers of this in terms of looking at where we can go. MLS, Erik, I'm glad you brought that up, and Denise, we've had this conversation. We have no information on ADUs in the MLS other than what people are willfully putting in there next to just notations where they say like odd things about a swing set on the property. We need information in the MLS that says there's a category for tracking ADUs. Is it attached? Is it detached? What's its size? So then we can track transactions that are happening with that property. Now that leverages our opportunity to get better results from the appraisal community. So there's some steps in here that we absolutely have to take as we continue to plot our way forward past the early adopters phase into more of a market phase. Understanding this, with 9 million homes in this state that could do an ADU, we could probably comfortably say that 10% of that population could do it without creative financing. that means that we have about a 900,000 ADU market that's low-hanging fruit for us that we should work on making sure we're doing everything to get momentum with. It doesn't mean abandon where we really need to go with this, but let's make sure that we're capturing what is already there for us and we're doing a good job with it. The low-hanging fruit leads to the exploration of how do we go deeper now? And I think we all want to go deeper right now, but it's a challenge because that means we have that financial partnership that's required. And they're looking at us going, 9 million homes in this state and you're only at about 15 or 20,000 population. It's a little risky for me. Let's get a little further along and then call me back. And that's been the general consensus.
I think that's a great way. It's a great way to kind of summarize this last, really the presentation tone generally. These laws just happened in terms of the marketplace and the economy and the lending community. And it's only in one state that it's now widely legal. And it's not just one or two ADUs on every single family lot. It's also ADUs in multifamily structures. Karen's data said that's mostly in San Francisco. It's mostly in San Francisco because they had the innovation to make it legal. So they've been doing it for a couple years, whereas the state just made that a law this January. So I think that
we've done a few in Oakland too, but their problem is that they actually name it two different things: accessory structure and accessory dwelling unit, and it confuses the crap out of people. But these are just things that these are things that as we get education, we get awareness about. Okay, what do we need to do to make it easier for people to understand?
Yep. All right, let's get some audience questions in. I see Karen had a question, and we have some audience questions. David, are you going to ask those, or do you want me to? I'm going to go ahead and ask one while I'm waiting to find out. So question one, how do owner occupancy requirements impact ADU development and financing? And Karen, did your research look at that question?
We're looking at it right now. We're doing a homeowner survey right now of everybody who has gotten a permit or built. So we'll answer that in the next webinar.
Okay. And then another question, why are newer mortgage holders more likely to build ADUs? Shouldn't folks with more equity in their homes be building more? Is that a question of awareness? Newer homeowners are in the market. They're talking to brokers who are telling them, oh, by the way, you can do an ADU, and older homeowners aren't? Or is that they can't make their mortgage payments unless they have the ADU? Did you look at that, or do we have data on that yet?
We don't have data. We have a few hypotheses. We think that people have, you get your loan to buy your house, and you squeeze a little bit more out of it at that time to put an ADU in back. So we're seeing a lot of new homeowners, plan upfront to build that ADU. Steve wants to jump in.
This is Gary. Just anecdotally, the homeowners I talk to have no interest in being a landlord, and I know that was identified in your data. Some of those are older homeowners that just don't want to deal with some of the hassles. They like their established neighborhoods for whatever reason. So that's been an issue here.
Okay.
I loved seeing that because it was an interesting thing to see, and it caused me to kind of go back in our records and look at how does that correlate to our records of hundreds of these things done. What we found is that it's merging, families merging, and the original property held by maybe two different families didn't suffice in making it something that they could both collectively agree on. And so finding a new property, selling the two other properties, merging the dollars and doing it that way has become an interesting regular part of some of the things that we've seen.
Next question, Karen, for you. Did you look at ADUs being built as short-term rentals at all? And just a note to the audience that the recent round of ADU bills disallow that ministerial process for being used for a short-term rental. You have to agree to a rental term of longer than 30 days in order to be eligible for this state law ministerial process, precisely so that we're not creating hotel rooms by building permit. You're really creating housing. But Karen, did you look at that at all, whether homeowners are doing these as Airbnbs?
in our current survey, we're looking at that. We've done that work in our survey on Portland, Seattle, and Vancouver, and there we found that actually most were using it for longer term rentals. That was sort of the most common use, say about 60% using it for that, and just quite a smaller share using it for short term rentals.
And Karen, you said you had a question if we had time, so I'm going to let you jump in.
My question was for you, Denise. So I was listening to Steve talk about how you got those bills passed in Sacramento and how you would just, pick 2 or 3 things from your menu, right? And so you had this incremental approach, and we've all thought that was really brilliant because we've been, doing a couple things every year and just kind of, it's like a sneak attack, right? That
Don't tell my secret, Karen. Now look at all these cities on this call. I'm going to be hearing from them tomorrow. By the way, I was a current planning chief.
This is what I'm wondering, though, exactly, Denise, because all these, now we did our survey of cities, we heard from them that they just hate it, having to redo it every time. So how can we help the cities?
Yes, absolutely. Great question. In fairness, we had no idea whether the first bill would even be successful. So we made the smallest carve down we could. If the structure exists, you got to issue a building permit to allow it to be an ADU. And we redefine these as accessory units, not second units. And that's really all it did, other than parking waivers. Then suddenly it was so effective. And most of the numbers you're seeing are from that first bill that was adopted in 2016, signed into law in 2017, so barely 3 years old. And the legislature fell in love with that idea. So we had a bunch of different bill authors who all had a different take on what they wanted to do. So it was a little bit of constructive chaos. We were trying to manage it so all of these pieces were smart and focused and helpful, not harmful. And then the big ones, as Steve pointed out, were last year, where you essentially have a zoned envelope now under 8068 for a new construction ADU that allows these manufactured homes to be plug and play in a rear yard. And frankly, my personal opinion, and I'm not an elected official, is enough. We've done enough at the state level, and the job now goes back to the locals so that they can do that job well. And the job is really the things you identified in your survey: public awareness, helping cities administer these laws, maybe minor technical fixes if things are confusing or just really not workable, in which case I invite the audience members to be in touch with anyone on this panel, with the Terner Center, Karen, or the Casita Coalition through our website to let us know what you're seeing that maybe we could be helpful with. But as far as personally I'm concerned, and the folks I know who were instrumental in designing these bills, the cities are doing a great job. It's a popular housing form, and we should be happy with the successes and now help cities and homeowners learn about it, and try not to keep going back to the state legislation. Well, so apologies to all my current planning colleagues. I was in your shoes many years ago, which is why these ideas seemed so smart at the time, because I did a lot of code enforcement and ADU abatement in my local government career. So in any case, but I think we're done for a while on the big stuff, and now it's really about implementation. And with that, I think do we have any more audience questions, David?
We are out of time. We actually had a ton of audience questions, which just shows how passionate people are about this topic. So thank you, Denise, for this conversation. I want to thank Steve, Erik, Gary for being a part of the panel, and also obviously Karen for all the great work you do. I am really excited for this survey you're going to do now. So and as a reminder, all of this work is out. Karen's work is on the Center for Community Innovation page, the Terner Center page as well. And we will have this conversation on the website if you would like to listen again or reference anything that was said here today. So again, I want to thank everyone for tuning in, and everyone participated today. You're all great partners, and I appreciate all the work that you do. But with that, I want to say thanks a lot, and enjoy the rest of your day.
Thanks, David.